Welcome to the WRS Retirement Benefit Calculations presentation, a Wisconsin retirement system topic. By the end of this presentation, you'll be able to explain the individual components of the two retirement benefit calculation methods and describe what affects your WRS retirement benefits for each type of calculation, money purchase, and formula. First, let's look at the definitions of the two different benefit calculation methods. We compare two different calculations to determine your retirement benefit. The first is the money purchase calculation. This uses your entire account balance at retirement and a factor based on your age at retirement. The second is a formula calculation. This uses your creditable service multiplied by your final average monthly earnings, this looks at your three highest earnings years, multiplied by a formula factor based on your employment category and an age reduction factor. Once these calculations are performed, ETF compares the calculation results and you will get paid the higher of the two. Let's look at the money purchase calculation in detail. The money purchase benefit calculation starts with all of the money in your account, which includes both your core trust fund account balance and, if you participate, the variable trust fund account balance. We multiply these balances by a money purchase factor that is based on your age at retirement. These are the only two factors used in your money purchase benefit calculation. Here's an example of a money purchase calculation. The total balance of the core trust fund and variable trust fund equals $215,000. Multiplied by the money purchase factor for age 56 years and 4 months, 0.00563, which equals $1,210 in the for annuitants life only annuity option. To get that money purchase balance that you see in the calculation, we add your employee contributions, matching employer contributions, and interest. If you're in the variable fund, your money purchase balance includes all core and variable contributions along with interest earned. Now let's dive into the formula calculation, which is a bit more complicated than the money purchase calculation. The formula calculation starts with your final average earnings. This amount is multiplied by your creditable service, which is then multiplied by a formula multiplier, and finally multiplied by an age reduction factor to get your final benefit amount. If you participated in the variable fund, you would also receive a variable adjustment that is added to or subtracted from this amount. In the following slides, we're going to look at each of these factors in more depth to understand where the amounts for the calculation come from. Your final average earnings amount is calculated by adding together your three highest earnings years. They don't have to be your last three, they could be your first three, or they could be any combination of the middle. This amount is then divided by the creditable service earned in those three high years. This would be 3 if you're full-time, and divided by 12 months to come up with your final average earnings amount that is used in the formula calculation. Your service is determined based upon the number of hours you work for any employer in the WRS. You can earn 1 year of service maximum in a year, whether it be a calendar year or a fiscal year. For teachers, the number of hours to receive 1 year of service is 1,320 hours. For other WRS categories, 1 year of service is achieved in 1,904 hours. Other eligible creditable service includes any years spent in active duty military service before 1974. Up to 4 years of creditable service maximum may be earned for military service. You may also have purchased creditable service that can be included in the calculation. Qualifying service for purchase includes forfeited service, which is any creditable service hours lost due to taking a separation benefit, or other governmental service, which is credit you can purchase for any service hours working for a non-WRS public employer at the federal, state, or local level, or military service started January 1st, 1974, or later. The formula multiplier is based on your employment category and whether you earned service for your WRS employment before 2000 or after 1999. Elected officials, state executive retirement plan employees, or judges includes a formula multiplier after Act 10, effective in 2011. This formula multiplier is based on state law and actuarial recommendations. The age reduction factor used in the formula benefit calculation is determined by two factors. If you retire before normal retirement age, your benefit will be reduced. The second factor is the number of reported years of service and service hours. The more years of service you have, the less of an age reduction factor there will be. Minimum retirement age is the earliest age you can begin receiving a benefit. Normal retirement age is the age you will receive your benefit with no age reduction factor. If you're retiring between those two ages, you will likely have a retirement penalty, which we call your age reduction factor. The older you are, and the more service you have, the smaller that reduction will be. Another key factor to consider when looking at the age reduction factor is your employment category. What employment category you are in also affects your minimum retirement age and normal retirement age. If you're in the general employees category, which includes educational support staff and teachers, your minimum retirement age is 55 and your normal retirement age is 65. If you're in the executive, elected, or judge employee category, your minimum retirement age is 55. However, your normal retirement age is affected by whether you began employment before January 1st, 2017, or on or after January 1st, 2017. If you were employed before January 1st, 2017, your normal retirement age is 62. If you were employed on or after January 1st, 2017, your normal retirement age is 65. Protective occupation employees, such as firemen or police officers, have a minimum retirement age of 50 and a normal retirement age of 54. This is due to the hardships of their position. Normal retirement age is the point where no age reduction occurs in your benefit calculation. For most employees, this is age 65. If you are age 57 and have 30 years of service, the benefit is calculated as if you are age 65 with no age reduction. In the protective service category only, if you have turned 53 and have 25 years of service, there is also no age reduction. You can still choose to work past these ages and years of service and continue to earn interest on your account. At any time that you choose to retire after that, you will receive no age reduction factor in your calculation. Finally, let's look at the last factor that can be used in the calculation, the variable adjustment. To determine the amount added or subtracted to your formula benefit calculation, we take your variable excess or deficiency and multiply this by the money purchase factor to receive the total variable adjustment used in the formula calculation. Let's look at your variable excess or deficiency amount a bit closer. The variable excess or deficiency amount is the difference between what your actual account balance amount is and what it would have been if you had been invested only in the core fund. This amount can be either positive, an excess, or the amount can be negative, a deficiency. This amount can be found in Section 8 of your Statement of Benefits. Let's look at this adjustment in dollars. In this example, we'll use a total variable excess amount of $4,263. Remember, excess means a positive amount, multiplied by a money purchase factor based on your age at retirement, 56 years and 4 months old in this example, which equals your variable adjustment. The positive amount of $24 will be added at the end of the formula calculation. Now, we'll see how all these factors work together in this formula calculation example. In this example, we start with a final average earnings of $3,625. This person had service hours before 2000 and after 1999, so 2 formula factors are used in this calculation. Once those separate pre- and post-calculations are completed, they're added to create the subtotal of $1,673. This subtotal is then multiplied by the age reduction factor, in this case 0.885, to bring the subtotal to $1,481. Because this member was in the variable fund, a variable adjustment is made. In this case, due to an excess, $24 is being added to the calculation, which brings us to a grand total of $1,505 lifetime benefit amount for the annuitant's life-only option. To summarize, let's take a look at the differences between these 2 calculation methods. The money purchase method is based on your total account balance and age at the time of retirement. If you participated in the variable fund dollars are included in your account balance. The formula method is based on your 3 highest years of earnings, total amount of service, and age at retirement. If you are in the variable, an adjustment is calculated based on your variable excess or deficiency. Finally, check out our events page to sign up for presentations on topics you may be interested in, with the ability to ask questions of our knowledgeable benefits specialists. Stay connected to ETF. Get up-to-date information about your WRS benefits by subscribing to ETF email updates, talking with a benefits specialist, going to our website, or connecting with ETF on one of our Twitter or LinkedIn social media sites.